Welcome to a new update in which we're going to discuss the price action of Bitcoin, as right now Bitcoin is getting back up to the levels where it was before we had a few banks collapsing, and therefore we're going to look at the technical aspect of the markets at this point. We're not going to explain what's actually happening. That is something that we'd like to do on this YouTube channel, but that's for a later point. For now we have to focus on the price action, and we're going to look at what Bitcoin is doing. Before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also check out our free trade letter. Today there's a new one explaining all the macroeconomics. You can find it in the description beneath. And there's also a premium platform where you can find trade IDs, my portfolio and more. And that's all in the description beneath as well. So we had a pretty heavy week. Tomorrow there's CPI. And Biden already mentioned that CPI is going to come in hot, or at least better than expected, which means that it's going to be lower than expected, and therefore markets are getting prepared for a potential case that the Fed is going to pivot. And why is that? Well, we had a few banks collapsing, and all they started with an S, Silicon Valley Bank. We've had Signature Bank, and we also had the earlier one, which was attached towards crypto, and all of them are. And in the meantime, we had a rescue plan from the Fed, which saved everything. And that's why we can see the markets currently rallying up substantially. What we also know is that PacWest, Western Alliance, and another bank, First Republic Bank, are on the brink of collapsing. Because if you're looking at them, trading is probably halted. Western Alliance Bank Corporation, it's down 83% and halted. First Republic Bank, which is also a relatively large one, is currently down 78%, which means that there is more to come when it comes to the markets in terms of crashing, because the rescue plan of the Fed is only saving the banks that have the specific assets in their portfolio. And First Republic and Western Alliance are both not banks with that in their portfolio, which means that the rescue plan is not saving these banks. So there is a systemic issue in the markets at this point, in the banking system in the US, and that is giving its effects to the markets, and that's giving its outlook for the markets and making it go everywhere. So what we have been witnessing is that Bitcoin has been falling as there were fears, stablecoins have been crashing, which are all back towards back at this point, and we've got the entire system of the TradFi, the traditional finance, making its moves. So when we're looking at the first important one, and I've been saying it over and over and over again, if you want to see adjustments in the markets, and if you want to see the thesis of Bitcoin running up or risk-on assets doing well, you want to see the yields fall apart. At this point, we are seeing, and it's on the screen, you can see the 2-year yields. They have been crashing. It's down 11% on the day. But more importantly, the bips that we see in this drop have been the heaviest ever. The last 2 times we have been seeing this, or which were relatively similar, was after the 1987 crash and also 1929. Which means that this, what's happening right now, is one of the largest events in the history of banking system US. We are not even discussing the amount of debt that the US government has and the amount of debt they have to pay, but they started QE back up, which means that risk on goes up. Now, if we erase everything that we have been discussing previously, and we erase everything that has been happening in the past week, the thesis still stands, which means the Fed has to pivot or pause the hiking process, and therefore open the gates for risk on to continue the fake relief rally. Because now some banks are falling apart. But when these interest rates are rallying up, you would also assume that if you hold in a collateral that you have been buying in 2021 with an interest rate of 1%, the face value of your property is going to drop substantially when the interest rates are rallying towards 6 to 7%. So the real estate markets and the debt markets still have to get the shock, and that takes time. So the markets are currently dropping from 5.1 to 4.07% in the yield markets. If you go towards the weekly time frame, from a technical point, you can conclude that we are done. And we are on the edge of continuing this fall, which means that most likely the Fed will continue to pause or whatever. You can also see that it's breaking on the 6 months, 10 years, same view. In the meantime, I've also been marking this level on the 10-year yields. We are getting back towards the lows. These are dropping less because they are longer maturity on these assets, which means that it takes some time. The DXY, following the pattern which we were discussing here. So the dollar is dropping, which means the euro goes up. You see the yields dropping. The entire banking system in the US is currently collapsing. And as I said, we're going to discuss that more. In the meantime, stock markets don't really care. We have been seeing a red start of the day, and currently we are bouncing back up as risk on starts to do relatively well, until new banks start to collapse. So it's a very tricky market to move in, and it's a very tricky outlook when it comes to where we're going. Now, what is doing really well at this point? Of course, gold does well. It starts to break out here, back to 1900. Also, if we're looking at Bitcoin, we can look at the technical point. The technical point is that we have been seeing a downtrend since this high. We have been getting a bearish divergence here. It tricked me because I've been looking for longs overall here. We sweep towards 19.7, which I mentioned was probably the next level when we are going to lose 21.3. We did it, and now we rallied back up, in which we are seeing a tremendous move back towards 23.5. Multiple reasons are there, but we are at crucial resistance, which means anything between 23.2 and 23.8 is a resistance point here. But ultimately, if we look at the chart at this point, we can conclude that we are going to continue the rally. So we're getting into that fake relief period, which is opening the gate for continuation. Based on the daily time frame, where you're looking at for potential longs, I think 21.3k is the optimal long entry at this point if you are not into a position. Otherwise, you're looking at a position to after we flip 23.3 to 23.8. But you have to zoom in a little bit more because it's such a volatile move. The two scenarios that I'll be watching here is, actually I'm looking at one. I think that we continue to push a little bit, have a fall, take the liquidity here around 24k, and then we drop towards this block. So probably that's going to be the scenario that I'll be looking at, which I'll be looking at a potential long case in between here. And then we continue the entire rally. It's very comparable to the price action we have been seeing in the structure here. I think that we continue, but I think that we are going to make some retests. As I mentioned on social media, I think it's a period where you don't really want to see heavy corrections taking place, because that is just showing that sell pressure takes over. But in this case, if we have a healthy corrective move to retest a few levels, it is enough to continue the actual trend, which is in the coming period upwards, as apparently everything goes up again. Invalidation for the scenario is also quite clear. If we lose 21.3, I'll be out. So if we reverse here, I don't believe we're going to hit 21.3. But I think any range thing between 22.2 to 22.5 is probably a proper entry for longing. I would not be supporting shorting at this point too much. Looking at Ether, I think that we have a little bit more of upside to go, but it looks tricky at this point, which I mean, we take the high. This is my potential short case, and we can also do that from here if we take the liquidity above the high of 1680. If we drop beneath 1610, we get towards 1580, reject at 1610. I think the optimal trade is to look for this short, and then we look for 1520. Then we can start looking for longs. But also if you look at the weekly time frame, we might be concluding that we are on the edge of continuation here for the coming 4 to 6 months, which ultimately is going to result into the markets having that relief rally before the impact starts to take place on the real estate markets and debt markets. I'll be back with a new update tomorrow. Make sure to hit the like button, subscribe to this YouTube channel, and I'll see you again. Ciao.